everybody, and thank you for joining me today. It's Allan Laboucan. I'm with the Rocks and Stocks News website. Today I've got Joey Freeze. She's the president CEO. I believe she'll straighten me out on that once she starts talking. Before I introduce her, I wanted to mention that Candente Copper, it has quite an exceptional story, but still a very modest valuation. I'm very bullish on copper, and I think it's very clear to everybody out there in the world, investors or non-investors, why there's a bullish story for copper, and most of that is related to the electrical vehicle revolution. What is much less well understood is where are they going to get all this copper from? And if you look at the various copper companies out there, Candente rates very well. I mean, they're one of the top 10 undeveloped copper projects out there. They have a growing resource. They announced today at their Canariaco Sur project, 2.2 billion pounds of copper, 1.18 million ounces of gold. At their main part of that Canariaco project is the Norte deposit, which has 9.29 billion pounds of copper in the measured and indicated, 2.14 million ounces of gold. So they've got a lot of copper, a modest valuation, a bullish story for copper. Let's get into it, Joey. Thank you for joining me today.
Okay, thanks very much for inviting me to join you.
Well, let's get right into the news today from Canariaco, or from Friday, from Canariaco Sur. This is not the main deposit, but looks to enhance the asset.
Yes, exactly. Well, we had up till stepping back here. As of 2013, we had 15 holes into it, and we really didn't think there was enough there to establish a resource yet, or the fact that we've only drilled off what we think is half of it. You know, why force the issue at this moment? But we knew it looked good. It had higher gold and it had no arsenic and that. But when we were doing the PEA, we decided to get a resource run on it to see if in fact it was starting to shape up to be anything significant. And well, it is. You know, we were very pleasantly surprised about the amount of gold. So it adds, as you said, and there's one number you got wrong. It's not 1.8 million ounce gold yet, but it's 1.2.
Oh, sorry.
That's okay. Well, I just need to clarify so I don't get into trouble. So yeah, if you talk about Norte alone, which is where we started all our work because it had the highest grade when we acquired the whole project. But we've always wondered exactly what Canariaco Sur will give us. And then there's a third prospect at Quebrada Verde. We call it a porphyry center. It's got similar rocks, geochem, geophysics, and some mineralization in creek beds, but no drill holes yet. So in any event, now with what we know at Norte, and it is all drilled off, there's 9.29 billion pounds now measured and indicated, and I can't add these up, but you can add them up. Or the readers and viewers can add them up. So measured and indicated 9.29 billion pounds copper, 2.14 million ounces gold, and 59.46 million ounces silver. And this is using a 0.15 cutoff, which at 350 copper is considered break even. So obviously you're
not just sort of making that up. You've already previously done an preliminary economic assessment that you're now enhancing.
Exactly. So because of current long-term metal prices, they moved the cutoff, or I should say they're using the cutoff. They're showing that it's break even now. So obviously you'd build an operation based on a higher grade starter. But you know, these resources, if copper stays where it is today, will get mined, because your resources have to be defined within a pit shell as well. So adding to that measured and indicated, we have in Norte, we've got inferred an additional 2.66 billion pounds copper, 500,000 ounce gold, and 18 million ounces silver. And then in Sur, as you already said, 2.2 billion pounds of copper, 1.2 million ounces gold, and 15 million ounces silver. Now, all of that is still inferred, by the way, so much lower category. But that's
Just
all.
at Sur. At Norte, it's measured and indicated.
And the second one I mentioned is inferred. So you're right. Yeah, a lot of it would go to proven and probable with feasibility. So it is adding up to very substantial resource, and we've still got room to grow it, because on Sur we got higher grades to the west in phyllic alteration, and we expect that to be, continuing. I can't say how far, how much, or anything, but as soon as you get higher grades, your resources add up fast. So anyway, it's all great. We're very, very happy with the way the project's going.
So if you look at all categories at Norte, you're looking at 11.8 billion pounds of copper and over 2.5 million ounces of gold, combined with 2.2 billion pounds of copper at Sur and 1.2 million ounces. I mean, I can make a case that just alone on your gold, that you're tremendously undervalued, let alone the copper.
Yeah, that's a good way to put it. Don't have to worry about the exact numbers, but yes, totally agree.
Yeah, I mean, normally if you look at a takeout on the gold alone for 2.5, 1.2, let's say 4 million ounces of gold, you would get about a 10% of that value in the ground. So you're trading at a steep discount just on the gold alone.
Yeah, yeah, you're right. Yeah.
And, copper is getting more and more bullish. And I think at some time, maybe that's when gold or copper gets over $5 a pound, which I think is going to happen. And I think that that's going to be an area where it stays for a long period of time. Investors are going to start to get more and more excited.
Yeah, definitely. A lot of people coming into the space that weren't normally resource investors.
And that brings up a good point, Joey. I'm very bullish on copper. What I'm having a hard time doing is finding a lot of good copper stories. And I think that is indicative of, a fundamental reason to be bullish on copper is because we don't have enough copper deposits in operation right now, and not nearly enough in the pipeline to become future mines.
No, that's very true. Supply demand is very, very in a very tight spot. Yeah.
Yeah, and very bullish for copper. And so another thing that I think you've already been re-rated. There has been some bullishness coming in. You guys are no longer at your lows. You've come off of those quite significantly. But the big news is your preliminary economic assessment. I mentioned earlier that if you use the copper valuation metrics, normally in a preliminary economic assessment, those assets sell for about 1 to 3 cents per pound of copper in the ground in a takeover scenario. And you guys are trading for a fraction of a penny on your copper assets. And either way you want to look at it, as a gold project or a copper project, either way, it's quite a compelling argument with a $61 million valuation. Let's talk a little bit about that preliminary economic assessment, Joey.
Sure. So the first thing we decided to do with Ausenco, because they'd done some work for a third party when things were very quiet, and had suggested we could have a smaller startup for lower capex. So that was very interesting for us. Doesn't mean that the work done in 2011 based on 95,000 tons per day, and that time was a capex of about 1.6 billion. Today's world would probably be 2 billion. There's nothing wrong with that project as far as that throughput. We just wanted to start smaller so that the initial capex would be lower. But the other things that are changing in the project, that whether it's you start with a smaller throughput or the larger, is that we've gotten rid of needing a roaster for the arsenic. We've discovered that the arsenic is variable enough in the different rock types that you can do a lot of in-pit blending, but also it reports to the con a lot less than was assumed. So in fact, from 85% of the arsenic down to 35 now is understood to be reporting to the con. So it's just not the problem that, was initially thought should be dealt with the roaster. So we got rid of the roaster. That's a complication for everyday operations, but also some permitting. And then we've moved things around a bit. So we've got a smaller footprint. We've got commingled tailings and waste, which means it's actually going to be dry stack, which is much more stable. So smaller area and much more stable. And then using a conveyor system more than trucking. So lots of ESG components that are very favorable. But as I say, whether you start small the way we're now moving towards with this new PEA, or you want to start big, somebody wants to buy it from us and start big, the resource supports it, the project supports it. So, but it's optionality.
And even with that roaster, your original preliminary economic assessment looked viable at much lower prices than we're currently looking at with copper, right?
Correct. Yeah. Yeah. It was based on 250 copper.
So, we're getting up to maybe 10 or 15% from that, double that price. And now you've been able to look at a very significant savings in your capex cost with the roaster not needed.
Right. Yeah.
And it's not to be lost on people that dry stacking is the wave of the future. You don't want any of these wet tailings ponds to cause any problems. And so those are two big hurdles, if you will, or advantages, let's say.
Right, exactly. Improvements or enhancements, yeah.
And so that has to be a big help on the permitting side, should you go down that road.
Absolutely, yeah, definitely.
Okay, so any estimates on, I guess you've probably got some sneak peeks into the preliminary economic assessment because you put some cutoffs in this resource. Are you getting close to that preliminary economic assessment being completed?
As I told somebody else earlier today, some days I think it's imminent, and other days I think it's not so imminent. But a lot of things have been sorted out and are understood, and as I said, we're very very excited about it. But there are still some numbers flying around and different things. There's a lot of people working on it. One of the things that's a little bit complicated is taxes in Peru. So we've hired a third-party consultant to make sure we understand the taxes very well, and because everybody wants to know the post-tax economics. So that's one of the things that we've gone into quite a bit of detail on.
Do you think it'll come within the next couple months, sort of thing? Is that the?
Oh, absolutely. No, I cannot see it going past this month, past February.
Oh,
Sure.
wow.
Yeah.
So we're coming down the home stretch.
We are, yeah, for sure.
And I think it's important also for people to understand that, you're not just using any Joe Blow off the street for the preliminary economic assessment. You're looking at some of the best people in the industry doing this work for you. Is that correct?
Yes, Asenco has works all over the world, but they've been EPCM and building in several operations in Peru. So they certainly have lots of experience in country and lots of Peruvians working for them. So no doubt. And their specialty is finding different ways to do things, or not untraditional, but just really not also thinking out of the box is the main thing. Like this whole work they did with geometallurgy when we were embarking upon a smaller startup and I started asking various engineers, a lot of people just said in their brain, it was just, if there's arsenic, use a mitigation. Don't even think about, what ended up being done with geometallurgy. So they're great group, yes.
Well, and that has thinking outside the box is definitely something that needs to be done these days in the mining industry with all that demand that's coming. I mean, the supply chain is just not there, nor will it be, if you look out many years into the future, it's not pie in the sky sort of arm waving. You can see what's out there in the development pipeline and just not enough.
No, absolutely. It's quite frightening, actually.
Exactly. And I don't think people really get a grasp of, I've said to some people that, these technology companies that want to develop all these things, they're going to have to start looking at investing in mining. Because, where are you, if you don't get a leg up on the production side of things, where are you going to get it all from?
Yeah, that's a very good point.
So, uh, I think that point about using the best, and you also have a fairly significant investor in your company that is a copper interested company. Tell us a little bit about your big shareholder.
Well, Fortescue is internationally known. They're one of the biggest iron ore producers in the world. I think fourth or fifth. And they decided to get into copper some years ago now. I don't know exactly when, but they've been exploring in Ecuador, Peru, and Argentina. And they also have started a whole green energy second company. So they're very interested, very, very much like copper as a commodity. Know the huge impact it has on the future. I believe at this point we're still their most developed project that they're invested in. But they basically, I think, came to us because they found that it's not as easy to make discoveries as it is to buy into them. And so they're very happy what we've done so far, especially mitigating the need for a roaster. And the truth is, if they decide to build Cañariaco, they may prefer the larger throughput, 95,000 tons per day, or even bigger, because in some of our studies we could see that 110,000 tons per day is supported by the resource that we have in Norte, and then not even talking about Sur. But that would be their choice, of course. They have a lot of money. Bigger the better for them. But I think permitting, as I've said, would be easier to start small. But yeah,
Yeah, when we talk about a $2 billion capex for a junior exploration company, that's a big price tag. But when you're talking about someone like Fortescue, that's actually what those kind of companies are looking for.
Exactly. Yeah.
Because they want long-lived mines.
Yeah, and you always get a better NPV and IRR, if you spend more money up front. You just have to have that money to spend to begin with.
Well, Candente may not, but your big shareholder may.
That's very true. Yeah.
So I guess that leaves several potential end games here.
Yes, absolutely.
I don't think it's out of the question that they could consider you as a takeover or maybe as a partner.
Yep. No, absolutely. We've had various discussions, and we'll just keep working together and see what happens. And
keep discussing. I
in the
imagine a lot of the majors these days, they're run by number crunchers. And I guess that preliminary economic assessment is something that they're also eager to see.
Yes, it's very important for many reasons. One being that our 2011 work, these days by now is a little bit old. But so getting the new numbers out will be really good.
So just to put things into context, the preliminary economic assessment that was done back in 2011, we were sort of at the tail end of a very bullish market for the commodities, copper, gold, everything kind of came to an end in 2011. So you had a long window there where there wasn't a lot of interest in developing or exploring for copper. But now that we're getting a more bullish market, is why you guys have now decided to enhance that economic assessment. And the work you are doing is quite significant on that roaster and metallurgy and that sort of stuff.
Yes, no, exactly. And well, first of all, we decided for economics, we wanted to see if you could start with a smaller capex and then ramp up, but also on the ESG front. It was get rid of the roaster for all sorts of reasons, and technologically it was very good, and it was spits out the arsenic as scorodite, which is an inert mineral, so that really wasn't a problem. But it's just another operation, and obviously people don't like to hear the word roaster. Um, but then it was, what else can we do to enhance the project? Get a smaller footprint and do a better job with the tailings and waste, and more like, as I say, the conveyor system versus trucking, and moving things a little further away from the current populations and into the area that's land that's less used currently. There's no families living where the copper is, but they do live. The community of Kenyaris lives to the north and northwest. So
I hope it's not lost on people that when you do these kind of economic assessments, being able to, cut your capex dramatically, have enhancements from metallurgy, being able to more efficiently move your rock around, and what you do with that at the end of the day, those are major steps compared to what you had looked at before. And then you've also got sensitivity to the price of copper that has been enhanced of late. So you guys have a lot of things going in the right direction.
absolutely, I'm glad you recognize that, how much work has to go into this, and hence when people say, when is the PEA going to be ready, or when are you going to release the results? Everybody thinks it's an easier task pulling it all together than it is, but it's huge. All the various engineers working on it, you can imagine. All the
And
different.
you want to get that snapshot right, not the timing isn't nearly as critical as presenting the economics of all of this work properly. If it takes an extra few weeks, that's nothing compared to getting everything right to present this project with better economics.
Absolutely, every aspect. It really takes a lot of iterations and putting everything together with what each other finds in their domain of what they're working on. So yes, I have to get it right, the best we can. It is still a PEA, not a feasibility, but on the other hand, there's so much behind it with all the work we've done in the past that it's, I think, a very strong PEA. I can't say it's anything other than a PEA, but it's a very strong PEA. And so there's just a lot of information to pull together. Yeah.
Now, Joey, I'm not an expert on PEAs by any stretch of the imagination, but are there like different, how do I say it, levels of quality of a preliminary? For example, if you look at a project that has measured and indicated or just inferred, that's good. If it's in measured and indicated, that's a higher level of confidence. What is there different aspects of a preliminary economic assessment, and are you guys kind of doing the best possible version?
There's nothing to a PEA as a PEA. Having said that, as you say, your resource is the first fundamental aspect of your PEA. So if you're measured and indicated, obviously you're going to, or mostly measured and indicated as Norte is, I think only 8% of it is inferred being used in the mine plan. But there's that. But then all the engineering you do, it also depends on how much time they've had to spend on it and such. But there's certain aspects that leave it as a PEA. So you can't say it's a higher level PEA than another level of PEA. But having said that, obviously we did a PEA back in, I think it was 2007 or 2008, looking at a leachable option, SXEW, and at that time we were given a capex of 140 million. Now our next level of leach testing was too sporadic, not that none of it was any good, but it was too sporadic to be the foundation to go into a pre-fees, and in fact led us to move into a flotation. So the next PEA we did was flotation based. And then since then we've just been building on everything. But when you change as much of the infrastructure plan and the mine plan as we have, you have to go back to it being a PEA. You know, there's
Okay.
just enough, which is why we're calling it a new PEA, not an updated PEA.
Okay.
So I wouldn't want to imply that, you know, it's virtually a pre-feasibility or something. You just can't do that. There's some
But is, are you doing some work that gives you a leg up on a feasibility study? Like, are you,
Well, we have a lot of discussions going on with Asenco as to whether or not we in fact could go straight from this PEA into feasibility. And I believe there's a good chance we can do that. But we
okay,
have to get the PEA done first, completed
sure,
first.
sure.
Then we can look at all that. But I would say what the engineers have told me is because we've already done a lot of met testing, a lot more than you would do for your standard PEA, and we've got a lot of samples, core samples waiting for further met testing, then, you know, those are all the things that, a lot of the things that back up. We've done geotech drilling. We've, you know, done a lot of things that you wouldn't do for your first PEA.
I guess the nature of my question, Joey, was, everybody always wants to do comparisons. And, getting an apples to apples comparison is not always easy, even at the preliminary economic assessment. But I think you touched on a couple things there that will sort of make it so you can show that it's apples to apples or apples to oranges, in that most of your resources in measured and indicated, and you've also done a significant amount of metallurgical work. So that gives you a higher comfort level than if it was all in inferred and not much metallurgical work done.
Yeah, and also all the detailed work that was done in the geometallurgical modeling. That's a lot of detail that wasn't understood about the deposit before. So we have much better handle on many aspects of the deposit.
Excellent. Let's leave it on that note. Joey, do you have anything you want to close with?
No, just looking forward to another booming year with copper being needed around the world, and hoping we'll be able to supply it to the world soon.
Well, and I keep thinking that I don't think people even understand the need of copper for rewiring the aging infrastructure, power grids in the industrialized countries, and then the needs for the developing countries. That, just even if you took the electric vehicle out of the equation, we're not having enough copper. So, and I do want to close it on one thing. You talked about in our last interview that there was some comparisons done to where you rate on undeveloped copper projects. Why don't you leave on that note, Joey, and then I'll close off.
Sure, let me just share a slide here. So there you can see Haywood's research and where we're sitting with Cañariaco copper. Not the highest, not the largest, not quite the highest grade, but definitely in the right ballpark.
That looks like you're up in the top 10% or so.
Yeah, it does.
And you're, even Tech is in there. And what are some of the other Hud Bay? name some of those names, Joey.
Sure, sorry. So Hut Bay Rosemont is up here. And so this is size and this is grade.
Okay,
And so we're next to Hud Bay and Rosemont actually for size and grade. Then just below us here is Hot Chili. And then Tech with Zafranal. KGHM here with
yeah,
Ajax. Polymet Mining's up here. So they're very big and smaller in smaller size, I should say, in, with the grade. And then you've got Copper Mountain here and Arizona Sonoran.
yeah.
And Nexa Resources with Magistral is down here. And then out here you have Trilogy Metals with Upper Kobuk.
When I look at that, Joey, one, I noticed that you're in a very good group of companies, but most of those deposits would average around, let's say, 0.4% copper. You do have a few outliers like Trilogy, and I think there's one way up in the high grade. But even when you go up into the higher grade, you get smaller deposits.
Yeah.
So if you're looking for size and grade that's mineable, you know, you're right in there with a heck of a good group.
Yeah, absolutely. No, we were very happy when this research came out.
Is this available, Joey, to investors to take a look at?
Yeah, you can just go to Haywood and ask them for their copper research dated December 2021.
Okay, good. That's Haywood Securities, right?
Correct. Yeah.
And is that in your corporate presentation
This
or no?
slide is in our corporate presentation. Yes.
Okay, so they can go to candentecopper.com.
Yeah, and see our presentation, and then they can go to Haywood and ask for the full report.
Oh, okay, so it gives more details about what you're seeing in these. But I think if you look at it, you know, you're up in the grade where most of the projects are. You're at the top end. You are in an optimistic point in the grade size, and you know, yeah, there's some outliers there that are higher grade, but they're also quite a bit smaller. And majors are looking for those big ones that have, you know, mineable grades, and it looks like that's where you are.
Yeah. No, we're in a very good spot.
Okay. Well, maybe if you go off the share screen, I'll wrap it up, Joey. But as I said, you know, I'm very optimistic about copper. I'm a copper bull, and I think you guys have something that everybody should be looking at if they're bullish on copper.
Thank you very much.
Okay, let me wrap it up, Joey. We can have a chat on the other end. So there you go, folks. I started by mentioning the valuation of the company. We talked about the assets, and the enhancements that they've done. We didn't really, well, we talked a little bit about the price sensitivity. That's one thing that can, you know, bring a new valuation to the company. If copper goes over $5 a pound, like I think it is, that's one reason for a potential re-rating. But the main reason is this preliminary economic assessment that the company's working on. So then you take a look at all of those things like Joey did in that final slide there, and they rank right in the top 10 or so of assets out there, copper assets that you know, these are the lists that major mining companies make their shopping lists out of, and they already got a big miner as a big shareholder. So I don't think under $100 million valuation for this company is going to be around for too much longer. But as always, my shows are for information purposes only. It's important for you to do your homework, speak with your financial advisors. But if you're bullish on copper like I am, I think you should take a look at Candente. DNT is their symbol. Their website's candentecopper.com. go do your homework and check them out because I like what I see. Have a great day.